Luisa Gómez Bravo sees her role as CFO of BBVA beyond just being at the helm of the bank's finances.
It's like a little bit like being a doctor, no? You're the guardian of the health of the institution of the bank.
Since moving into the job 18 months ago, Gómez Bravo has helped BBVA not just survive, but thrive, pushing revenue and profits to all-time highs. But that's just one piece of the picture. Spain's second largest bank draws 2/3 of its income from abroad. In Mexico, it's the largest financial institution. In an effort to bolster its Spanish presence, it's pursued a takeover of peer and rival Banco Sabadell. Now the challenge is not just to grow the firm, but to reshape it.
I see the CFO role as a strategic partner, and you have to be on top of where you are putting your capital, the planning of capital. And in a bank like ours, we are in 30 countries. How do we deploy that capital? In which country, in which segment, in which product?
Accountability is important, and entrepreneurship. You know, as a finance director, you need to also be a little bit of an entrepreneur in that way of thinking ahead. So I'll try to anticipate as much as possible during your time in Davos in a very concise way, so you don't have to take a lot of time in reading it.
Perfect. She's one of those who never stops giving me feedback and challenging me and so on. She never stops in taking initiatives, which is very important in our business. She never stops in terms of grit, in terms of hard work, in terms of analytics.
What's really critical as a CFO is communication skills. You need to be able to give advice and understand the business and the strategy, but you also need to be able to have that, critical, constructive challenge and dialogue of what you're seeing.
At the core of that strategy is technology and innovation.
I do think that the banking industry is going through a transformation. Today, the key interface channel has moved to digital, has moved to mobile. You have to invest a lot in technology, a lot more as compared to the before. The traditional role of the CFO, which is making meaning out of numbers, seeing the whole picture, seeing the full forest, it's even more important.
The way we see it at BBVA, innovation is not just an output of an app or a commercial campaign or product attributes. It's really a mindset. It removes away the fear of trying things new. And in the world that is changing so fast, being able to adapt is very important. And having a finance function that adapts quickly is crucial.
The stakes are high and the pace is accelerating.
So this is like when you're driving a car, right? Finance is the one that has the headlights on, the high beams, it's looking at the road. It may be raining, it may be not, and you're ensuring that you're 2 steps ahead, seeing what the context is, what the environment is, and at the same time as finance, you're fueling the car because the resource allocation is critical for that transformation to be delivered.
In 2024, BBVA ranked 16th among European banks by total assets. But when it comes to efficiency, it consistently punches above its weight, known among its peers as a bank of bankers.
The best measure of success is how you do versus competition, no? In that context, 15 largest European banks, which is our peer group, among the 15, we are number 1 in profitability, return on tangible equity, and we are number 1 in growth.
Much of that growth now comes through the bank's digital channels, made possible by some prescient pivots in the past.
The first one was over a decade ago when we decided that the mobile was going to be at the center of what we do. And that was radical at the time because smartphones were only in the hands of a very few people. Everybody was web-based. And we said, no, mobile. That was a very important decision. The other decision, and this goes back to execution and the banking side, is that we decided to not have a separate digital bank. So the bank itself had to be digital. The bank itself had to have a different relationship model with its clients.
Digitalization is one of the main strategic goals of banks because it helps the banks in Europe to bridge essentially two targets. One is on profitability and one is on cost. We see the number of transactions concluded in a branch significantly lower than, say, 5 or 10 years ago. That's one of the reasons also why the bank are shutting down branches, and they trying to move client online accounts and apps on the phone.
10, 20 years ago, the key interface that we have had with our customers, it was through the branch. And it was a frequency of 40 days. Once in 40 days, our customers, they used to go to a branch to do their stuff. Now, 24 times a month, our customers interact with us. You have to leverage the data that you accumulate through that higher frequency interaction and so on. So our business is changing in a major way.
BBVA's business spans the globe, operating in more than 24 countries. This broad footprint carries risks as well as rewards, from political unrest in Turkey to soaring uncertainty in Mexico, where Donald Trump's tariff agenda has roiled the peso and cast a shadow on the economy. Despite the volatility, BBVA remains firmly committed to its largest market.
We are true believers in Mexico as a country, independent of what you might be seeing or hearing in the next couple of months and years. Mexico is going to thrive.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
When you're in emerging markets, you are in volatile environments, more so or less so. Structurally speaking, we do still have a very positive view in Mexico. On the macro side, because structurally speaking, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, you've seen it grow because structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
While BBVA builds on its success in Mexico, it's working to expand its business in other parts of the world, including right at home in Spain. Its proposed deal with Sabadell would push the firm beyond 100 million customers and above €1 trillion in assets.
The Spanish, business is focused on customer acquisition. We see that acquiring customers generates revenues going forward, and that is the focus. Acquiring market share, gaining customers on a digital basis, and continue to improve on our efficiency.
Is BBVA trying to compete with Wall Street? And if it is, how?
I don't think our objective per se is competing with Wall Street. I think the diversification that we have in our footprint provides us with a competitive edge in delivering, I think, what is a unique value proposition in the banking space, which is combining growth with profitability and creating value for shareholders.
It isn't easy for banks to scale in Europe, where barriers to entry in each individual country remain high. Gómez Bravo says BBVA's digital expertise is the key to overcoming those obstacles.
The European story regarding digital banks, or Italy and Germany, is a different route, let's say. It's really actually building on the scale that we have in Spain, and at a marginal cost, being able to provide banking services, full banking services in Italy and Germany. So it's actually a reverse play on the scale, right? I already have the scale. How can I marginally, at a marginal cost, increase that scale more? And that's the initiative in Italy and the initiative in Germany. So it's a way to compete in other markets, in a cost-efficient way.
Even as BBVA and its European peers scale up, their price-to-book ratios lag behind their global competitors. Along with a boom in defense spending, record buybacks had boosted the sector's stock performance. BBVA has committed to $1 billion in share repurchases.
It almost feels like European banks are taking a page out of the American playbook. Is that fair?
I think the European banks in general were underperforming the American banks, and I think there was catch-up to be done there. And I still think that European banks are trading, below American peers when their profitability levels are, much nicer than the way they were before. But obviously there's been a positive trend in the evolution of the European bank stocks. Obviously the rate environment is more positive, and with a terminal rate scenario that you can put at 2% or 1.75%, European banks are going to be structurally positive.
You're still at very distressed PE levels, despite buybacks, despite dividends that we know that BBVA has been kind of putting forward. So how do you combat that in 5 years' time?
No, I think it's about delivery. It's about delivering, such amazing profitability and returning that to the shareholders and investing in your franchise at those levels of profitability.
Coming up, Luisa Gómez Bravo takes me to the trading floor and tells me why she believes BBVA can become an even bigger deal maker.
And the CIB, just like anything else, it really is about talent.
This is Bloomberg.
¿Cómo estás? ¿Qué tal todo? ¿Bien?
When BBVA CFO Luisa Gómez Bravo visits the trading floor, she's in familiar territory. Gómez Bravo began her career in finance as an investment banker, first at Salomon Brothers and then at Lehman, before joining BBVA in 1998.
On your path from deal maker to CFO, you've done a little bit of everything. How has doing a little bit of everything shaped your experience?
I think it's been very important, especially for the CFO role. Why? Because when I was running CIB, for example, that was my previous role, or running asset management, you're running a business. Then I also have done several COO roles in wholesale banking, in retail banking in Spain and Portugal, transformation roles, which helped me understand a little bit the functioning of the bank, right? The nitty-gritty of how efficiency works and productivity works, right? Which is important for your CFO role. And I think, last but not least, everything that has to do with investment and cost management, because I was head of investment and cost management. So I think all helps.
Women remain a rarity in the C-suites of large European banks. Gómez Bravo's rise to CFO demanded an extra measure of persistence.
When you're working your career as a woman, sometimes you don't think that what's happening to you is just happening to you because you're a woman, right? But then, with hindsight, you think that, well, maybe there was a bias here or a bias there, and I think we've all suffered a little bit of that.
What do you tell a girl who says, I want to be you one day? What do you tell them?
I would tell her, go for it. Persevere.
Gómez Bravo's roots in deal-making serve her well at a time when BBVA is looking to expand its investment banking business. It increased headcount in the world's two largest financial hubs and expects increased productivity to follow.
We have always been very good and big in CIB, but we want to do even more. We have a very clear plan of 5 years, and that 5-year plan is basically, we are going to be doubling our gross margin coming from the CIB business. But then we will continue. It will continue. I mean, the share of CIB, corporate and investment banking, within our total revenue base is 15%. In general, for other banks, it's around 30%. We are at 15%. We have to grow the share of CIB within the total bank.
Some would say, critics would argue, that this is the moment that investment banking isn't doing so well, that deal activity hasn't gotten there. So why is BBVA moving forward in the very industry that people are taking a step back on?
When we plan our growth strategy and investments, especially in the CIB business, it has to be a long-term vision. So, of course, we take into account the volatility of investment banking every year, but we're not growing in a volatile way. We don't hire 1,000 people and fire 500. It's not like Wall Street banks, let's say. So we have a gradual view of growth, so that we don't run into the risk of having to wind up things as we go along. We're structured. It's a long-term story.
Is this step one to scaling up, though? At what point does the hiring yield dividends?
It definitely has, obviously, an impact in your efficiency ratio at the beginning, but obviously your plans are to compensate that with higher growth in the offset. There's always a hockey stick in the investment, but we try to ensure that the productivity is there. But because we started investing already a few years ago, this is a journey, and we are reaping now the profits of investments that we did 2 or 3 years ago.
You talk about the measuring stick a little bit. So in all of these plans, what does success look like? What do you see that says, I did it?
The fact that you are growing your business, that you have competitive advantages in specific spots. We're not competing everywhere on everything. We have solid positions in Southern Europe. We have solid positions in Latin America, in currencies, in infrastructure lending, in project finance. And in those spots that we've decided that we have the ability to compete, we have a right to compete. And I think the fact that we're doing business and growing our clients and growing business with the clients that we have in a profitable way is the best measure of success.
With rising uncertainty and geopolitical risk, deal execution has become more challenging. But that doesn't worry Gómez Bravo.
I used to say when I was in, the head of CIB, it's not so much, especially in global markets, it's not so much about the scenario of macro recession or expansion. It's about taking advantage of the volatility. And I think, again, the CIB, just like anything else, it really is about talent. You think about the number of employees in the bank that we have, right? The number of employees in the bank is around 125,000 employees, above 120,000. CIB employees are around 3,000. And with that, you're generating, in a different type of year, between 50 and 20% of the bottom line of the bank. So managing talent is something that CIB leaders need to develop very significantly. Because again, yes, you make a wrong decision in trading, and it costs you a lot of money, but you need the talent to get you out of that spot.
Coming up, BBVA isn't the only European lender with M&A on their mind. CEO Onur Genç explains why he considers banking consolidation critical for the European economy.
In Europe, unless we solve this issue of scale, we cannot really compete as Europe, and we cannot really grow as Europe.
And Luisa Gómez Bravo tells me what she thinks her biggest challenges are as CFO.
I think that, to me, really, it's the speed of change.
This is Bloomberg. BBVA began its pursuit of Banco Sabadell in May of 2024 and hopes to close the deal by the summer of 2025. If it comes to fruition, it would mark the first completed transaction in a wave of consolidation attempts in European banking.
Some would argue that BBVA and the Sabadell acquisition has almost paved the way for other potential
M&A is
banking
back
deals.
on the table.
It absolutely is. It's the juiciest thing in Europe right now, isn't it?
I think it makes sense that the consolidation, there is a new consolidation waves at the moment in Europe, because we are already in a change of monetary policy. We know the ECB is cutting rates. So when banks could count less on, say, the net interest income, the traditional income from the banking activity, then they need to look around and see how this can be somewhat offset or matched. There is also the topic of trying to contain the cost. So one way to adjust the cost base is to merge two similar banks in the same jurisdiction.
Critics say that consolidation limits consumer choice. But banking executives argue limits on growth hamstring Europe as a whole.
Why is consolidation so important for Europe right now in the banking space?
Because Europe needs to grow. Europe needs to grow. I mean, if we again take 10 years, 15 years, 20 years, 30 years, the growth of Europe versus the growth of US or any other geography that you can pick off is so little. You have to grow in Europe. In Europe, different than US, 75% of corporate borrowing comes from the banking system. In the US, it's 25%. The rest comes from capital markets. In Europe, unfortunately, capital markets is too small, so the banks provide the funding. Banks provide the ammunition to invest, to companies to grow. So you need banks, you need strong banks, you need profitable banks. And in the context of the fixed costs becoming larger in banking, You need to be large. In Europe, unless we solve this issue of scale, we cannot really compete as Europe, and we cannot really grow as Europe.
The case against consolidation would be that the larger you are in scale, the more it could hurt the rates and the growth for everyday earners, everyday citizens, for consumer rates. What do you say to that?
We have multiple metrics to show that in different parts of the world, Europe, there is so much competition. Europe is the second largest, as EU, as the continent, as the Union, second largest GDP in the world. And in the top 25, there is no EU bank. Isn't there something wrong in this? I mean, so the other countries and other banks in other countries, there's competition there, but they are very large. It doesn't fit. There are many measures to look into competitive nature of our banking markets in Europe, and I fully believe that there is no competition issue. We should let banks grow.
While awaiting approval on a Sabadell takeover, BBVA is pulling other levers, from opening new private banking hubs to expanding its wealth management division.
What we do see is that the wealth management business is democratizing. It is being cascaded now to a larger number of customers and to a more diverse set of customers. So in the countries that we are in, we will see much more growth in wealth management than other businesses that we have.
Mexico is outstanding, but Spain has a lot of potential as well to do more there, and I think we can do much more in Spain and across the border in Latin America.
Do more and do better. Those are the principles driving Luisa Gómez Bravo as she helps steer BBVA into the future. I ask her what she sees when she looks ahead.
What is the opportunity in BBVA over the next decade that excites you the most?
Well, I think it's this challenge regarding digitization and taking that forward and actually really advancing the relationship model with our clients, right? Finding those opportunities of being, a better partner for the clients going forward. That means that we're going to be looking at growing also in corporates more, in other businesses, in those capital-light businesses. So I think there are plenty of growth opportunities, and I think at the core, it's really the client, right? And how can we accompany the client better to be able for the client to capture his dreams, no?
Hypothetically, let's talk about the opposite there. It's a hot summer night in Madrid. You can't sleep. What's the challenge that's keeping you up at night?
I think that to me, really, it's the speed of change. It's not the change itself, because I said we're accustomed to change. It's the speed of change. And how quickly can we adapt, and how quickly can finance adapt? So it's that speed of change and that time to market against that speed of change that really is more in the background of my mind.
Complete this sentence. The hardest part of being a CFO is?
Prioritizing. Prioritizing externally and internally. So prioritizing externally, meaning that you have to prioritize resources, you have difficult conversations, but internally as well, because you have to manage your agenda. And sometimes you have to prioritize internally as well what you devote time to. So prioritization, I think it's quite a hard thing to do.
Is there an area of knowledge that you would advise a CFO to develop?
I think analytical skills are important. I think more than an area specific of knowledge, because your team should have that knowledge, and if not, you should get a team that has the knowledge. Obviously, you need to like the numbers. If you don't like numbers, then don't go into finance. It's sort of like a recipe for disaster if you don't like numbers. No.
So if I call you up and I say, Luisa, I have great news. I just got promoted to CFO. What's the first piece of advice you give me?
Be cool and be calm. That's be cool-headed and be calm. I think that's a good recipe for success being a CFO. Focus on communication, being transparent, focus on learning, leadership. It's your ability to have a view of the forest and being able to deep dive at the tree level as well.
I'm Kriti Gupta. This is Bloomberg.